Bitcoin's been kind of stuck here for a period of time. I've said repeatedly that for me, Bitcoin is the purest. Gold will continue to have its strength, but at the same point, Bitcoin fits in. So whenever the AI trade reaches a profit-taking mode where retail gets hurt, I think everyone should expect Bitcoin to go down. It's not just Bitcoin, it's Solana, it's Ethereum. There's been a lot of speculation in the Bitcoin miners. I think we just reached a point where, again, we've sold off. The AI trade is still in the very early stages, despite all the fears that come out. So it makes sense for Bitcoin to have corrections. And I just want to remind people, NVIDIA's up over 1,000% since ChatGPT's launch.
Bitcoin is no longer just a digital currency. It's fast becoming the purest play on the AI revolution, with analysts calling it the tech trade of 2025. Bitcoin, BTC, is currently trading around $109,433, showing resilience despite a minor 24-hour dip of 0.11% and positioning itself for what could be an explosive rally. According to Jordi Visser, president and CIO of Weiss Multi-Strategy Advisors, Bitcoin is increasingly intertwined with the broader AI-driven investment narrative. In recent commentary, Visser described Bitcoin as the purest AI trade, asserting that in a tech-disrupted world, its role as a decentralized store of value becomes even more critical. As retail investors dominate market sentiment in 2025, speculative interest in AI-related stocks and digital assets like Bitcoin, Ethereum, and Solana has surged. Visser reveals that while institutional players remain cautious, retail euphoria has pushed valuations higher, though periodic corrections are inevitable. Drawing parallels to NVIDIA's meteoric rise, he reminds investors that multiple 20% plus pullbacks occurred before it reached all-time highs, suggesting Bitcoin may follow a similar pattern. Meanwhile, enhanced security features in next-gen crypto wallets now offer institutional-grade protection, supporting broader adoption. With 10x Research forecasting a wide BTC price range of $20,000 to $124,000 in Q4, and geopolitical shifts like a potential US-China deal looming, Bitcoin's role as a macro and tech-driven asset remains front and center. The Bitcoin AI story is just beginning. Share your perspective in the comments, pass this along to your peers, and subscribe for insights on every major shift shaping global markets.
Fed rate cut. The economic data is good. I don't think people are worried at this point about a rate cut in October. At this point, we're still above 80%. The rate cut happened. Everyone was positioned for it. All year, we've kind of had these events occur where retail, not the institutional side, because the institutional side is still fairly worried about AI. And there's been enough signs this week for people to be worried. Retail has been dominating the market this year, as we talked about last week with your brother and I. And I think there were signs, which I highlighted in the video last week, that all of the retail favorites, a lot of the meme stocks, crypto, everything had just a really rapid rise leading into the Fed rate cut. And so when you get an event like this, everyone was talking about sell the news. The market really hasn't fallen much. We've just had 3 days of weakness going into today. But I do think retail as a whole was a little euphoric going in. You saw a pullback. I don't think it has much to do with the Fed and getting through that. I think we started this week off with more AI fears from the institutional side. And I think they've kind of triggered the need for retail to look for the next catalyst. So that's all that's really gone on. 25 was priced in. But I do think people should take one thing into context as we go through this. Corrections are going to happen because the market is being driven by one investment theme. And until we start to see the PMIs broaden out, which I think will happen, as I've said repeatedly over the course of the next year, the S&P 500 is being driven by about 10% of the stocks. They're all related to the supply chain of AI. So whenever the AI theme, let's say, runs into profit-taking mode for a period of time, and retail's been all over the AI theme. They've been all over Palantir. They've been all over NVIDIA, Micron, all of these names. Once you reach a point where profit-taking is just normal, I think you're going to see the entire space come down because there's really nothing positive for people to hang their hats on outside of AI at this point. So Bitcoin fits in with this theme. And I want to equate, because I get a lot of outreach from people. So Bitcoin's been kind of stuck here for a period of time. I've said repeatedly that for me, Bitcoin is the purest AI trade, as AI goes through the complete disruption of all businesses. And the only moat that's left at the end of the day is a store of value that is in the digital economy. Gold will continue to have its strength, but at the same point, Bitcoin fits in. So whenever the AI trade reaches a profit-taking mode where retail gets hurt, I think everyone should expect Bitcoin to go down. It's not just Bitcoin, it's Solana, it's Ethereum. There's been a lot of speculation in the Bitcoin miners. I think we just reached a point where, again, we've sold off. The AI trade is still in the very early stages, despite all the fears that come out. So it makes sense for Bitcoin to have corrections. And I just want to remind people, NVIDIA is up over 1,000% since ChatGPT's launch. During that time period, which is less than 3 years, we're almost at the 3-year anniversary of ChatGPT's launch. You've had 5 corrections of 20% or more in NVIDIA before it went back up to all-time highs. Bitcoin's going to be the same thing. So you can take NVIDIA, you can take Bitcoin, you can kind of put them together as there. And I think people should start realizing that that is the reality, is that we're in a situation right now where as NVIDIA goes, as the AI trade goes, Bitcoin to some degree is going to be part of that as well. Well, so far this month, I think as of yesterday, even with Bitcoin being down where it was, I think it's still flattish for the month. Mm-hmm. I think stocks are up for the month. So I'm not sure September is going to finish down for the month. But I do think as we get through kind of the shutdown fears, which are now starting to percolate a little bit more, and for people who, we haven't really been together on this weekly during a real shutdown, there's got to be at least a 30-40% chance of a 1 week to longer shutdown in the government, just based on how polarized things are. A lot of times this thing gets solved right at the very end, so I wouldn't be surprised. But historically, it just doesn't matter for markets, but the fear factor's there. I think the more important event is happening at the end of October, and this is where I would expect that people are going to start to get more positive. The first thing is we still have the possibility of another Fed rate cut. The economy is fine. We just came out with a GDP of 3.8%, and now the GDP now is above 3.3, and that was before the personal spending numbers came out better than expected today. At the end of the month, Donald Trump will be headed out to the APEC summit. President Xi will be at the APEC summit. I believe that China and the U.S. are headed towards a deal, a structure that will allow them to be working together and not decoupling. I still think people believe decoupling is a possibility. And I think there's a chance here that a deal between China and the U.S. would get rid of hostility fears that are out there and kind of get people to resolve that maybe for the next few years of Donald Trump's presidency, China and the U.S. will coexist, as I've said, in mediation before divorce that'll happen at some point. But that just means the world can grow and we don't have to worry about kind of tail risks that would come through. I think that would be a trigger point in the next catalyst for the market as we go into the final couple months of the year.
The rapid convergence of AI and Bitcoin mining is rewriting the rules of energy, finance, and digital value creation. Bitcoin is entering a new phase of relevance as artificial intelligence reshapes markets, labor, and global finance. Jordi Visser reveals that while uncertainty over tariffs and inflation has eased, consumer sentiment remains fragile, with job fears increasingly tied to the disruptive force of AI. For markets, this means Federal Reserve policy is likely to respond more to labor market weakness than inflation pressures, creating a backdrop where Bitcoin stands out as a resilient hedge. At the same time, the convergence of AI and Bitcoin mining is emerging as one of the year's most important themes. Traditional finance is beginning to recognize the link between energy demand, power capacity, and the role of Bitcoin miners. As AI democratizes code, allowing anyone to transform ideas into monetizable applications, the overlap with decentralized systems like Bitcoin highlights the shared foundation of a digital economy built entirely on code. Visser argues that Bitcoin represents a moat in this new era. Just as Tesla is redefining itself as an AI company, Bitcoin is transcending its digital gold narrative to become the ultimate decentralized asset in a world increasingly dominated by artificial intelligence. Let's get back to the video.
I think the uncertainty, as I went through my weekly video last week, has been coming down. I mean, FactSet did a great job of just highlighting in the earnings calls from companies, which I think is a great way to measure this. The uncertainty for them on things like tariffs, the uncertainty for them on inflation. Those things have been coming down. And it's the rate of change. So we were at incredibly high levels in the second quarter. It's coming down, and they're also making money. for most of the consumer confidence levels, they're still very, very concerned. And I think that has a lot to do with the way the media has portrayed the fact that they're still, oh my God, they're coming. The tariffs, we haven't seen the impact yet. Everyone's going to be in trouble. Inflation's going to go higher. And at the same time, people are worried about their jobs. Mm-hmm. They're worried about their jobs, partly because of the tariffs, but mainly because of AI at this point. I think it's not going to resolve those two fears, but I do think for the marketplace, it will get rid of the fears that are in there from the company level. And every time that we see a second derivative or a rate of change in things like uncertainty, tariffs, inflation, things like that, it comes down. That's the other element that I think people have to start to be, you're always looking for the place where the smarter, sharper pencils on the hedge fund world are worried about. And people are still worried that the inflation data could tick higher. There's a lot of people calling this a policy mistake. My belief is that the labor market is going to remain on the weaker side, that we're going to have this problem that's going to be persistent for the next 12 months, even with PMIs going higher. I think the impact from AI is real, not necessarily in firing, but in this subdued labor market. And if you have a subdued labor market, you really need inflation to tick up dramatically based on what the Fed said. And if we don't see that, I think the mistake people are making is that rate cuts are coming more because of labor, less fears about inflation. Well, this continues the path that we've seen. I mean, I think, let me put it this way. If we take the merging between AI and Bitcoin mining, this has been a big year for it. First of all, the whole CoreWeave thing, when it came out, kind of got a little bit of enthusiasm. It was followed up by Circle in terms of the stablecoin side. But I think over the course of the last 6 weeks, we finally got the traditional finance people looking at the relationship between all electricity, all power, and kind of where the Bitcoin miners fit into this and this linkage between this. I do want to say this again and again and again. The world is built on code. If there's one thing that Jensen Huang did say that gets back to your emerging market side, which I think is important into the Bitcoin miner, the whole relationship and how these guys are looking for any capacity they can find. Jensen Huang said, this is the ability for kind of taking companies that had a huge advantage and allowing any person in the world to have the same superpower. And that superpower is to turn an idea into an application that can make money. So any child who can speak the English language and come up with an idea can speak into a phone and have an app built. They can connect Stripe to it and they can start collecting revenue on it if it's a good idea. They have to figure ways to promote it. All of this stuff can now be done because coding has become ubiquitous. And I think that gets important to Bitcoin miners, the relationship with AI. It's all code. At the end of the day, we're merging the digital economy. And this is the reason why I started to go with, there's the macro world, there's the AI world, which is basically dominating the macro world through GDP, through labor, through everything. And then you've got Bitcoin over here, which is the eventuality. And the eventuality is AI is going to disrupt everything in the traditional finance world slowly, but continuously. Is there anyone who doesn't believe, forget the views on Elon Musk, is there anyone who believes that a car company like Ford, GM, or any of them can compete with Tesla if their full self-driving works? The scale that he's built, the fact that he already has massive battery production, he's got humanoids behind it. Think about what he's been able to create, and he has his own LLM in terms of XAI. How can a car company compete with that in the event that he makes the inevitable progress? So if you think about an old traditional Ford, which is really the beginning of the Industrial Revolution in many ways, compared to where we are in AI, and take Tesla and view it, and I said this on my most recent video, it is not a car company. It is an AI company. Mm-hmm. And if people don't see that disruption that happens from Elon Musk and his vision that he put out 20 years ago in terms of what it meant to sell the first car, the Roadster, then turn it into more affordable cars, have those cars be collecting data with the eyeballs or the cameras, get those cameras into the AI thing. He built XAI in 2 years. I just think we're in a world where when people get through it, they realize Bitcoin is a moat where people believe in it as investment. And the more that AI is accelerating, eventually it will cannibalize the entire kind of fiat system, of which the Mag 7 are part of the fiat system.
Bitcoin is steadily moving beyond its reputation as a speculative asset and taking shape as a central player in the broader AI-driven economy. Its resilience, combined with increasing retail participation and growing links to energy-intensive AI infrastructure, positions it uniquely at the crossroads of technology and macroeconomics. Much like NVIDIA's meteoric rise as the backbone of AI hardware, Bitcoin is emerging as the decentralized counterpart in digital value creation. With its foundation in code and independence from traditional financial systems, it offers both a hedge against uncertainty and a gateway into the evolving digital economy, aligning closely with the future of innovation and finance. Could Bitcoin become the NVIDIA of digital finance in the age of AI? Bitcoin isn't waiting for anyone. Do you think it's the ultimate AI trade? Join the conversation below, share this with your circle, and subscribe to catch the next market-defining moment.